Welcome to my YouTube channel. If you like simple explanations about the stock market without hype, you're in the right place. Today, we're talking about the stock market in 2025. What actually happened? What moved prices? And what investors really learned. 2025 was not a year of panic, and it was not a year of easy money, but it was a year that tested patience, especially at the start. The early months of 2025 were uncomfortable. Markets dipped. Not a crash, but enough to make investors nervous. Inflation was still sticky. Interest rates stayed higher for longer. Many investors expected things to feel easier in 2025. They didn't. This dip wasn't driven by fear. It was driven by uncertainty. Investors were asking simple questions. When will rates actually come down? Is the economy slowing more than expected? Are stock prices already too optimistic? When answers weren't clear, markets pulled back. That's normal. Markets don't fall only on bad news, they fall when clarity is missing. Another factor added uncertainty. Politics. In the US, tariff discussions returned to the spotlight. Donald Trump's tariff policies came back into focus. Even before anything changed, markets reacted. Why do tariffs matter? Because tariffs increase costs. For companies, for consumers, and for supply chains. Markets don't wait for action, they price risk early. This mattered a lot for both the US and Canada. Canada's economy is deeply connected to the US. When tariffs are discussed, investors think about manufacturing, autos, steel, energy, and cross-border trade. Even the risk of tariffs can slow decisions. But here's the key part. The market didn't collapse. It stabilized. Companies adjusted. Economic data slowly improved. Inflation showed signs of cooling. The situation was manageable. That's when the rebound started. Not fast, not dramatic, but steady. People who stayed invested during the dip benefited. People who reacted emotionally had to buy back higher. Markets punish panic. They reward patience. Now let's talk about one asset that quietly did well in 2025. Gold. Gold moved higher not because of excitement, but because of uncertainty. Higher rates, global tension, tariff risks, political noise. For Canadian investors especially, gold acted as protection. It didn't explode, but it did its job. Another big theme in 2025 was artificial intelligence. But the story changed. Earlier, AI was about hype. In 2025, it became about results. Investors stopped asking, does this company use AI? They asked, is it actually making money? Some companies delivered. Their stocks did well. Others talked a lot and delivered little. The market punished that. This was healthy. AI didn't disappear. It grew up. In the second half of 2025, markets felt calmer, more selective. Large companies performed better because they were stable. Smaller companies struggled if profits were weak. Investors stopped buying stories. They focused on quality. For Canada and the US, 2025 made one thing clear. Interest rates matter. Trade policy matters. Political decisions matter. Markets price risk early. So what did 2025 really teach investors? Early dips don't always mean disaster. Gold still matters in uncertain times. Trade policy can shake markets early. AI rewards results, not promises. And patience beats prediction every single time. 2025 wasn't about getting rich fast. It was about understanding how markets behave. They move on expectations, they adjust to reality, and they reward discipline. If you understand this, you're already ahead of most investors. Thanks for watching. If this video helped you, like it. Subscribe for more Canada and US market breakdowns. And hit the bell icon so you don't miss the next one. I'll see you in the next video.